Okay, shares of Gap having a rough ride, down around 5% after hours after reporting a rocky Q4 earnings. For a deeper dive into Gap's Q4, let's bring in CFRA Analyst Zachary Warring. Zachary, good to see you. Not a whole lot of good news here. What strikes you, your immediate reaction?
Yeah, immediately you look and the double miss is not great. Revenues down, EPS obviously a big miss there as well. It's just not a great quarter. Their guidance for next year isn't great as well. Down 5% or so, mid-single digits is what they say. They completed the sale of Gap China, which is going to hurt a little bit on revenues, but still sales down for next year.
Zach, it doesn't seem like you see this turning around anytime soon. You have a sell rating on the stock, a $5 price target. How much of the fact that they still don't have a permanent CEO, they have an interim CEO, it's been that case, though, for quite some time. How much is that holding back Gap's potential transition plan?
Yeah, that's part of it. Obviously, now they're looking for a new CEO for Athleta, like you said earlier. So there's a lot of a big shakeup going on with management. It would be nice to get a permanent CEO in there. I don't think that's the problem. I mean, it's part of the problem for sure, but the brands that they have not been executing. Obviously, Athleta was kind of their strong, new, young growth brand that brought a lot of investors got really excited about Athleta, and they've kind of faltered here in the last part of the year. Sales down this quarter, which is pretty crazy for a brand that was growing, 25+% for 4 or 5 years there.
Yeah, I'm curious about that one in particular because you cover Lululemon. Is that a sector issue or an athletic issue?
It's an Athleta issue. Lululemon's probably got a little bit too much inventory right now, so we have a hold on Lululemon, but it's not because we don't like their brand and their positioning. We're kind of waiting to see if they offloaded a lot of that excess inventory over the last few months. But we like, athleisure, that space. But we think it's more of a Gap and Athleta company issue right now.
What about Old Navy? When you take a look at their sales, they were at $2.2 billion, down 6% compared to a year ago. Their same-store sales coming worse than expected, a drop of 7%. What's it going to take to turn around Old Navy's business at this point? And what does that really tell us about the pullback that we're seeing in consumer spending?
Yeah, so they continue to shut down stores of Gap and Banana Republic, which is not going to help revenues next year. Old Navy, it's a more mature brand. They get 90% of their sales out of the U.S. So, Old Navy isn't going to grow much for the next 10 to 20 years. It is what it is, kind of. Gap's kind of in the same boat. A lot of investors got excited about Athleta because of the growth that they had. And you're seeing that falter now. So, they've got 4 or 5 brands now that aren't doing much in terms of growth. You're going to want to see Athleta, return to 15 to 20% growth before you really get excited about Gap.
There are 316 fewer stores today than there were in 2021. Given these numbers, do you expect further closures? Do you expect layoffs? Or where do cost cuts come from?
Sure. So I'm going to wait and see what they say in the call tonight, but they had planned for about 50 more store closures for Gap and Banana Republic this year, so in 2023. So, that's obviously not going to help revenues for them. We'll see what they say in the call, though.
Zach, you cover a number of retail names: Abercrombie & Fitch, American Eagle, Under Armour, Nike, Ralph Lauren. The list goes on. The clear winners in your space right now, what are they?
There's not many. So we really like Columbia's a great brand. They've done well to manage inventories. They've had consistent growth. They execute well. Management executes really well. So we like Columbia, but there's not many names in the retail space that we like. Most of these retailers in the last 3 or 4 months have done really well. A lot of these companies have seen 25 to 35%, share price appreciation over the last 3 months. So there's not a lot of names that we're really excited on. I would say if Lululemon can get their inventories under control, that's a company that, we like their brand and we like their management execution. So we'll have to see how their holiday sales went.
CFRA Analyst Zachary Warring, appreciate that. Thanks so much.